Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. On Friday, the Australian dollar faced another round of pressure, hitting the expected support zone around 66.80, and now all eyes will be looking to see this week if the market can rebound off this level, and if so, could correct itself back towards 68 cents. With that being said though, keep an eye on this level of 66.80 and exercise caution and closely monitor signals, as the market may break this level, but the 60-day moving average could save it, and as we see here, holds around 66.52. As previously seen, this market has responded positively in front of this level, so therefore I'm not turning too bearish, as this pullback was warranted given the rejection from 68 cents and now looks for a bounce. The euro dollar took a significant downturn and now looking towards its level around 108.35 to 65. I do anticipate the market could respond to a bullish bias and therefore look away from this level around that 108.35 and back towards 109 to 110, as the broader call still holds, even though the technicals are somewhat mixed. The dollar index, meanwhile, extended its rally onto 104.35, with the economic calendar highlighting the release of various PMI at the beginning of the week in Europe. This week's main attraction will be the Core Personal Consumption Expenditures, or the PCE price index, the US Federal Reserve's preferred inflation measure, which is set to be released on Friday. Turning to dollar yen, the market is attempting to recover after the call towards 154.79 found good demand. Nevertheless, the technicals are still somewhat negative, so therefore I do expect to see a rejection around that 157.80-90 area and look back towards its bottom side of the range. Keep an eye on the level of 154.70-90, as a break there gives no safety net until around 150.5. Sterling weaker and now looking back towards the bottom side of its range, somewhere around 128.80. I feel the market could respond to a bullish case and from there lead to a bounce back towards the top side level around 130, with the broader call still looking at that 131.5. Wrapping up with gold, the market dropped close to 2% and now falls all the way to 2,400 after earlier last week posted a record high. Keep an eye on this level around 2,400. If the market fails to show any demand, then we may see a further drop down towards 2,360 and the base holding around 2,352 to 54. That being said, the market was very strong last week, so let's see if the bulls do retaliate and see a bounce from 2,400 and look back towards the region around 2,450. Oil was also heavy and crushes the level of 78.80 and now puts in focus of 77.40-60 support line. A bounce from here is anticipated and therefore could see a move back towards $80 to $82. But if we do see a break of 77.40, then we could see an extension to the fall and look towards the region around $74 a barrel. And that's about it. Thank you for joining me. As always, look out for the interest rate report, and I hope you enjoy the great start to the new week.